All right, I wanted to jump in and share with you guys my bull thesis, kind of my due diligence on Palantir Technologies. As you can see here on the screen, they build and deploy software platforms for the intelligence community. They assist in counterterrorism investigations and operations both in the United States, the United Kingdom, and internationally. I previously analyzed this company back in 2023, around, I believe it was around the third quarter. It actually was a similar time of year as it is now back then. And I really originally looked at the company just because, you kind of Google what are the most searched for companies, what's everybody interested in. Mostly just because I wanted to see where retail was looking at. And, I typically don't buy into the hype on a lot of companies just because most of it's not substantive. And so when I first looked at Palantir, it was very skeptical on my part as to whether I was looking at something really worth investing in. And so I guess disclosure wise, I do own like 7 shares, so not a ton, anyways. But Palantir is something that I believe in it as a company, and so I just wanted to share a little bit about what I'm seeing as I'm analyzing it, both on a qualitative and a quantitative front. And so I'm not going to really read through every single little measure, but all of the data is here on the screen for you. So if you have questions, drop those in comments and whatnot. But just want to kind of move forward through it so that I'm not dragging along. As you can see, my cost basis. So I call this my bag hodling portfolio. As you can see here, these are the different companies that I do due diligence on: Crescendo, Disney, Future Fuels. I have a little bit of GameStop still. Don't judge me on that. HIMS, Immunity Bio, International Seaways, Innovative Solutions, Heritage Global, Palantir, SoFi, Vertra, and WR Berkeley. And I have a different investment case for each of them, different reasons why I'm investing. I don't have one specific approach to investing that I'm applying to everything. I've got different things that I'm trying out with these different companies. So, what I'm saying about Palantir and the reason I invest in Palantir is not the same reason that I would invest in a company like Disney, for example. There's a different bull case on my part being made for investing in that company. So, moving forward, I like to look at some of these ISS audit scores. They don't really mean a lot, but kind of seeing how the company's being viewed from a third party agency and doesn't score well, 10's the worst, one's the best. And so kind of moving the wrong direction there. But profits are all up. Returns on assets equity move in the right direction. Estimates by analysts are moving in the right direction. And then, of course, looking at cash flow numbers, beautiful, beautiful numbers there. Price earnings ratio still really high. PEG ratio still pretty high, but not bad, honestly. Price to book is, not crazy for a tech company, and price to sales is really high. We'll talk a little bit about that here in a minute. Of course, insider ownership has gone down. And so I don't know if that's a result of dilution or what happened there. But still relatively high at 5% of the company being owned by insiders. And then, of course, total cash there, just sitting on a mound of cash right now, and total debt, not to be confused with net debt. And I'll discuss that in a second. But sitting slightly lower than where it was a year ago. And of course, not moving in the wrong direction there. And so, again, if you want to know kind of where I originally looked at the company from, I've left some things in here. So if you look over here on the left side of the screen, I had originally kind of color coded these, green being, good signs, red being bad signs, orange being, uncertain, not a clear pattern going on. And so kind of here in this 2023 column, I wanted to re-look at, okay, I current ratio I didn't see as like necessarily a good thing. I don't know. I mean, it was really high, which is usually kind of good, but again, there's reasons why that might be bad, and I did discuss that in the previous video. But here on this right side under 2023 column, I've marked them green or orange or red, depending on if they're good. And of course, as you can see, it's all green. And that's the biggest thing that I'm probably going to talk about here. So if you want to skip ahead to the video where I'm talking about qualitative things instead of quantitative, definitely do that. But I'm going to try to not beat the dead horse. But current ratio still high, highest it's ever been at 5.55. In fact, here at our trailing 12 month for 2024, it's almost at 6. Um, and really, I guess I could put that as an orange or a red still, just because if you're sitting on that much cash as an investor, I want to see you deploying that cash and getting the best use for it. Um, but in the world we live in, where Berkshire Hathaway is sitting on the largest amount of cash it's ever sat on, maybe it's not a bad thing for a company to be sitting on 6 times its current liabilities worth of cash and cash equivalents. So still green. Cash generating power ratio. It's one of my favorite ratios just because it looks at how much money the company generates out of operating cash flow as opposed to investing or financing, because a company can float that current ratio by taking on lots of debt, and it'll look like it has a lot of cash, but that's coming in through that third section of the cash flow statement. So I want to see what percentage is coming through operating cash. And of course, really, 60 to 70% is good. And of course, if you're at 100%, that's incredible. But moving absolutely in the right direction, sitting at a very healthy spot, and even in our trailing 12 month, looking very good there. Operating cash flow, that's your cash from operations divided by your current liabilities. So again, wanting to look at, okay, if we just use cash that it generates through operations to pay off its current liabilities, can it manage to do that? And so this is where you want to see 100%, obviously, and sitting at 95%, right around 90% for the trailing 12 months. So again, absolutely in the right direction. And every single year, it's moved incrementally in the right direction. There's a little hiccup here, 2021 to 2022, but then that giant jump into 23. So looking really good there. Of course, debt to equity, debt to assets, and then here as well, I kind of got an asterisk, but the total debt as well. So I used total debt because it had a positive number and it was more useful for me. But of course, if you actually look at net debt, it's got, and I can jump here to, seeking alpha. I use that quite a bit. And so if you're going to look at total debt, you've got these positive numbers going back to 2019. And then net debt is negative numbers because they actually have a surplus of cash compared to the debt that's sitting on the books. Um, so you might see things about, oh, Palantir hasn't had debt and things like that. That's just because of those differences in terminology and definition there. And so again, I use total debt just because it gives a positive number, and at least makes me lean towards a conservative estimate rather than just seeing negative numbers and losing it. So of course, everything moving in the right direction there on our debt to equity. Um, Again, factoring in everything, debt to assets move in the right direction. Assets to equity also move in the right direction. And a company that IPO'd back in um, I have it here back in 2020 in September. The fact that they're cash flow positive, that their earnings are positive, that they're low on debt, they have positive equity, they're moving in the right direction on every account, is really a big deal. Of course, tangible book value per share. Typically that's not something you care about with a software company, but even there, move in the right direction. Even in our trailing 12 month, we've still got technically 2 more quarters to report because we just finished second quarter earnings, already at $1.81. So doing great there. And then total debt, capital expenditure, you had that giant bump there in 2022, but coming here to 2023 through trailing 12 month, it's right within that average. So continue to invest in the company and not blowing all of its cash, but again, you're sitting on $4 billion worth of cash. That certainly not going to be a giant red flag if they dump $100 million into some capital expenses. Earnings per share broke positive at the end of last year. And I like to look at annual over annual trends, and that's why I focused kind of drawing a line there in 2023. Um, but of course, you want to look at where we're at now, to kind of start projecting forward. And so we broke positive, and of course, we've already almost doubled that for 2024. And so moving again, absolutely in the right direction. We're profitable. Revenue is continuing to grow. Gross profit continuing to grow. Our operating margin broke positive and is already in double digits here on our trailing 12-month return on equity. Same thing. Um, and of course, I do that as an average of equity. Again, you can look at some of my old videos if you want to look into that. And here, kind of this stuff out to about there and down. I've already talked through all that stuff. I'd read through the 10K and really tried to take some detailed notes on some interesting things that I don't think most investors know about, just from watching your standard videos. And so, you can certainly pause the video and read through some of these things. Most of them are just kind of noteworthy things. I don't think there's anything crazy in there. But then here on this side for these about 4 rows is the stuff I really want to talk about here. And so, the biggest thing is, and I don't really have a specific order I want to go in, but the biggest thing is that every single metric that counts Palantir is improving in. So net dollar retention, their customer count, billings, their revenue, earning per share, margins, everything up and to the right. Um, Everything's moving in the right direction. They're profitable. They're growing. They're diversifying their clientele, and this is the biggest thing that I wanted to look for last year when I was looking at the company. Is you know they have they didn't have as many customers, and the customers that they had were they had a bunch of small fish and then a couple big fish. And of course, if you lose a couple of the big fish, then next thing you know, you you're in a tight spot. Well, they've managed to bring in bigger and bigger clients and a larger number of them so that they're not as dependent on a single client. And then the other big thing is that they've expanded far more outside of just government contracts. That's really how they kind of got their start. Was working with government agencies, and it's allowed them to have this kind of sticky platform to use. But of course, now you have things like Wendy's Quality Supply Chain Co-op (QSCC). They got that partnership last week on the 7th, or at least announced it on the 7th. But AI-driven automated workflows that connect an ecosystem of suppliers, distributors, restaurants, moving them into Palantir's AIP. It improves the scale, the speed of decision makings, and it connects all the disparate data sources into a single common operating picture. So, obviously, able to take not just Wendy's at a restaurant level, but taking their vertical integration and integrating it further, and giving them the ability to improve their business as a whole, top to bottom. That's a big deal, and that's not a small contract for them. And so again, here biggest thing for me when I've looked at the company is they've got competent, experienced, and passionate leadership in Alex Karp. He cares about what he's doing. He helped found the company. He helped build the technology that it's built on, and he cares about it. You watch any video where he's talking like this actually matters to him. He's not just kind of shilling something out there, and that matters to me as an investor. And then of course, here they have a history of actually delivering successful products, successful consulting, successful results, not just promises, not just hype, not just hope for their clients. And so a lot of what they do is have their clients do kind of a testimonial pitch style marketing rather than having to pay for commercial, however they would market. It's a lot different from how others would do it because it's just, this is AI that actually works. Just look at this client, this person over here, and they will tell you how it's worked for them. So being able to actually deliver what they're saying, and not just saying, "Oh yeah, down the road we'll be able to do this, and down the road we'll be able to do this, and we're going to break through, this discovery and this thing down here." No, like, hey, this is everything we can already do for you. Let's put it in place. Let's hit the ground running. And so Really, that's the growth case for them, I think. Of course, very pro America. Um, Alex Karp and any of them you talk to, like they genuinely care about you know the growth and expansion of American industry and America as a country and those kinds of things and whatever that means to you. But I care about that because as an American, I want American companies to do well. I want the American economy to thrive, and I want to be a part of that. And if investing in this company means I'm investing in that idea, that concept, I think that also is a giant draw for people. Um, to basically equivocate, a bet on Palantir being a bet on America. And let's see. So expanding into the commercial sphere, just a few years ago, they only had 14 commercial clients. Already, they're up to more than 300. Again, we talked about Wendy's. They're moving into U.S. manufacturing solutions. So there's a whole other set of products that they're starting to roll out, and basically creating an AIP that will revitalize the manufacturing sector. I used to work in manufacturing personally. That's what I did for a living. I worked in a machine shop while I was finishing my master's degree, actually in finance, and so I care a lot about manufacturing. I it fed my family for years, and so definitely a big deal there, but also just a big deal because it's expanding their commercial side of their business. DoD contracts continue to be fruitful. They expanded this merchandise store, and just hats selling out and mugs and stuff selling out. That just shows that their clients are passionate. Retail investors are passionate. And it just shows that there's awareness of what they do and why it's important out there. Um, and then here, getting this giant contract recently with Microsoft and the defense agencies, um, basically integrating with Microsoft and its Azure cloud compute, along with its AIP. And that's a huge deal because they're able to utilize their competitors as partners, rather than worrying about market share. That's my dog scratching himself. I apologize. Again, track record. They listen to leadership. They don't worry about just hypes and promises. It's about testimonials, and consistent growth. So again, consistency year over year. They had 391 in quarter one of 2023. They have 593 customers quarter two of 2024. Rule of 40, they're at a 64, which is beautiful. You want to be well over 40. Um, they're capable of eliminating the share dilution with the $2 billion in their available cash, beyond the other $2 billion they're sitting on. Last week, right at the end of last week, they got another $9 million Air Force deal, and just continuing to skyrocket. I asked some people on my X channel, what should I mention? One person mentioned it's named after a Lord of the Rings concept, and so why wouldn't you invest on that? So if you're a nerd, definitely consider that. And I'm not telling you to invest in Palantir. I'm just explaining why I have chosen to, why I find the company interesting, and what I'm looking at moving forward. Um, and of course, I talked about here, last time I analyzed it. What people have this fear around it about, I call it the Shia LaBeouf eagle eye syndrome. There was that movie back in, it was 2012 or something, about what AI and predictive systems will do, and basically letting computers make human level decisions. And I think what Palantir has shown is that they have such a good balance between the software side and the consulting side, because they have the experience on the consulting side to actually give recommendations on a human level of decisions that should be made, and how to proceed with the data that they've collected. And so I think that is something that other companies don't necessarily have, and it's what has enabled them to have a competitive edge, against others. And so I think that's what's going to drive it moving forward. I hope you've enjoyed this video. Definitely, if you're new to my channel or my page, definitely give me a follow or subscribe, like the video, share it, whatever else. And I will see you next time.